Right now, in terms of long-term financial planning, we're going to look at how to calculate internal growth rate. In this particular scenario, we have if Highfield Hobby Shop has a 12% ROA, that's a return on assets, and a 25% payout ratio, what is its internal growth rate? Now, if we consider the concept of internal growth rate, then it's easier to understand how to plug in our values. The internal growth rate is calculated as our return on assets multiplied by our retention ratio. And all of that is to be divided by 1 minus the ROA multiplied by the retention ratio. Now, the retention ratio itself is the exact inverse of your payout ratio. So that means that to calculate the retention ratio, we're going to utilize this 25% payout ratio. The retention ratio indicates all of that money that is reinvested back into the company. So if if payout ratio is 25%, then your retention ratio will be 1 minus your payout ratio, which is 1 minus 0.25 to represent 25%. So that's 0.75 or 75%. This is our retention ratio. Because the return on assets is given to us directly, we're going to go ahead and plug that in. So it's 0.12 multiplied by 0.75. All of that is to be divided by 1 minus 0.12 multiplied by 0.75. Now, when we go ahead and plug that into our calculator, for our numerator, we are going to get 0.09 or 9%. And of course, 1 minus 0.09 is going to be our denominator, which is the same as 0.91. Again, putting that into our calculator, we get 0.0989. That means that we have an internal growth rate of 9.89%. Don't forget to like and subscribe. And if you have any further comment or questions, please comment below. Thank you.